So how do you actually borrow 100% of the purchase price plus cost if you're not using any government grants or any schemes, etc.? So it's what we call a guarantor loan, where we're going to use your parents' property as a security for you to purchase a property. So let me ask you this now, okay? For someone that wants to buy something in Sydney for $1.5 million, how many people out there do you think has $367,000 to fork out as a deposit? Imagine you can find a product that allows you to borrow 100% of the purchase price plus cost because you don't have any savings in your back pocket. I'm your host, Tony Shah, and thanks for joining me on another episode of the Mortgage Chat. So how do you actually borrow 100% of the purchase price plus cost if you're not using any government grants or any schemes, etc.? Okay, so it's what we call a guarantor loan, where we're going to use your parents' property as a security for you to purchase a property. That allows you to borrow 100% of the purchase price plus cost as long as you can service the loan. And this is the problem we're having all around Australia, okay? Because borrowing power may not be the issue, but it's the deposit that's going to be the biggest issue. And I'm going to use Sydney as an example today because I'm from Sydney, and guess what? Sydney house prices on average is hitting just above $1.6 million. So that's why I'm going to use Sydney as an example today, because borrowing power may not be the issue. It's the deposit, especially when there's no government schemes that you can use, such as first home loan deposit scheme or even stamp duty concessions, okay? Because when you borrow above $1.5 million, there's no schemes that you can use, especially for the first home loan deposit scheme. And also, you still have to pay stamp duty. Now, the new scheme is going to come out in October 2025, but that goes up to $1.5 million only. But for today, as an example, I'm going to assume this is not going to be your first home. You can't use any schemes. You can't use any government grants, okay? I'm purely basing this on you borrowing 100% of the purchase price plus cost, and I'm going to show you how to do it. But first, I want to break it down a little bit easier to show you what sort of deposit we need if we were to buy something for $1.5 million. And I'm going to use 1.5 million because that's an easy number, okay? So let's break it down right now. So what does it mean when I say you're borrowing 100% of the purchase price plus cost? Well, that's exactly what it means. You're going to borrow 100% of what you're going to pay for the property, and also you're going to borrow the stamp duty as well. Now, not every lender out there allows you to do this, okay? But for simplicity, let's just break this down first, okay? So to buy something for $1.5 million without paying any lender's mortgage insurance, you need a 20% deposit, which is $300,000. And also you have to pay stamp duty, $65,000. And also you have to pay legal fees around $2,000. Okay, so in total you need around $367,000. So let me ask you this now, okay? For someone that wants to buy something in Sydney for $1.5 million, how many people out there do you think has $367,000 to fork out as a deposit? I've been in the industry for a long time, and I can guarantee you less than 5% of the people out there will have 20% deposit plus stamp duty, unless it's from equity or unless it's from Bank of Mum and Dad. More than likely, you will not see such a big deposit. And that's why a lot of people go down the guarantor loan path, especially when they can't use any government schemes or grants, etc. Okay? So you're probably asking, what is a guarantor loan? So a guarantor loan is essentially using security from your parents or even your siblings that has a lot of equity. It doesn't matter if it's going to be an owner-occupied property or investment property. If they have a lot of equity in there, you can actually use that property as a security for you to purchase your next property, okay? But you have to understand there needs to be a lot of equity in there for them to be used as a guarantor. Now, not a lot of lenders out there do guarantor loans. Only a few specific banks allows for guarantor. And even though some banks do guarantor loans, they do have strict criteria for them to be a guarantor. Okay, now I'm talking about security guarantor, not borrowing power guarantor. Okay, so the borrowing power wise, you as borrower still needs to be able to borrow the whole amount. Now, the guarantor is just providing their property as a security to purchase your next property, okay? So if you want to buy something for $1.5 million and your borrowing power is only $1.2 million, you got a shortfall of 300, the security guarantor doesn't help. You still need to be able to borrow that $1.5 million, all right? So just please get that correct, okay? A security guarantor is only providing you the security. It doesn't increase your borrowing power, okay? Please understand that. Okay, so I just showed you to buy something for $1.5 million in Sydney, you need $367,000 if you don't want to pay any lender's mortgage insurance. Now, if your parents or your siblings have a property that has sufficient usable equity to cover that $367,000, you can use that as a guarantor. And I'll show you how to break this down. So to find out if your sibling or your parents have enough usable equity in the property as a security, we'll first have to find out if there is sufficient usable equity first. Okay, so let's just assume the property is worth $1 million. Now, most lenders will actually let you borrow up to 70% of the value of the property. So in this case, $700,000. Now, if their existing loan is $200,000, that means 200 minus 700, that means it's going to be 500,000 of usable equity that you can use for your next property purchase as a security guarantor. Okay, so remember what I just showed you before. To buy something for $1.5 million in Sydney, you need $367,000. Remember, to buy something for $1.5 million, you need $367,000 deposit. Okay, so as you can see here, there's actually 500,000 of usable equity in this property. Therefore, you can actually use this property as a security for you to purchase next property because there's enough usable equity to use in this security. So therefore, if you want to borrow 100% of the purchase price plus cost, you can actually do it with a guarantor loan because there's enough usable equity in the guarantor's property. So essentially, you'll borrow the 1.5 mil plus $65,000 for stamp duty plus another $2,000 for solicitor costs. So essentially, your total loan will be $1.567 million. So as long as your borrowing power is not a problem, you can actually borrow the whole amount. So you're probably thinking, how do I remove my parents or my sibling off as a guarantor? The first way is you pay down your loan so the loan becomes 80% of the value of the property. The second one is the value of the property increases significantly over the next few years. Therefore, your loan becomes 80% of the value of the property. And the third one is a mixture of 1 and 2. You pay down your loan and also the value of the property increases. Now, because the property market has boomed all around Australia the last few years, it's more than likely the value of the property increases significantly, so your loan becomes 80% of the value of the property for you to remove your parents or your siblings off as a guarantor. And just a quick example, so since COVID, we've done multiple guarantor loans, and on average all across Australia, we've been able to remove guarantors off as a security within 18 to 24 months, purely because the value of the property increased significantly. And this is when the clients actually borrowed 100% of the purchase price plus costs, all right? So if the value of the property increased by 25, 30%, you can actually remove them off as a guarantor straight away because that means the value of the property increased enough so the loan becomes 80% of the value of the property. So there you have it, everyone. If you can't use any government schemes, you don't have any deposit on hand, you can actually use this method for you to get into the property market a lot earlier. Now, a lot of people wants to save up the 20% deposit plus stamp duty so they don't have to use the guarantor loan, or they don't want to pay lender's mortgage insurance. But I can guarantee you, the longer it takes you to save up that 20%, the more further you're away from getting into the property market because the growth in the property market increases faster than what you can save for the 20% deposit plus stamp duty. So please check out my YouTube channel because I do have a lot more videos on there that could guide you and build a good foundation, especially if you're a first-time buyer or you're a first-time investor or you want to use equity. As always, guys, I'm your host, Tony Shah, and thanks for joining me on another episode of The Mortgage Chat.